Okay, so welcome everybody. My name is Anka Metcalf. I'm the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in the market. I have been a professional independent trader for more than 25 years, and I come with 10 plus years in investment management industry in the financial markets. I specialize in high velocity trades. I will show you some examples of these high velocity trades, and I'm also the designer of an institutional proprietary trading system that is based on price support resistance, but there's a little catch here. I focus on 8 layers of price support resistance, not just on supply and demand. I also correlate my support resistance with specific trigger times into the market and also specific price zones that are known for institutional traders to leg in and out of trades. Chart synchronicity and divergency is very important to me, and every time when I begin my trading day, I assess the market environment. I look under the hood, use the SPY's diamonds and Russell. I also look at gold and oil for the market internals, and I try to determine support resistance and try to determine relative strength and weaknesses. And based on that, I decide where to start my scanning process. All right, so let's get started. Making money in swing trading is actually not as complicated as someone may seem. If you have a full-time job, this is for you. If you're on vacation, you could have your money working for you. You could actually trade from anywhere in the world and even when you sleep. You can manage your money better than any professional. I know it firsthand because, like I said, I used to work at a company and we used to manage high net worth clients' funds. And with that comes a lot of commission fees and, yes, huge fees that are charged for your long-term money, especially into your 401ks. You get monthly management fees. The cheapest out there are $300 a month. And that quickly adds up. That could be actually $3,600 a year. And if you think about it, $3,600 a year, and this is on the cheaper side, times 30 years until you retire, you would pay about $108,000 in management fees. That is not fun, and that is getting them rich and putting your hard-earned money into their pockets. Because the reality is that funds do not care if you make money or lose money in the market. They're just managing your positions. Now, before we dive into the presentation, here are some tips on how to avoid the pitfalls. These are the 5 mistakes that cost traders thousands of dollars. Number 1, chasing the wrong stocks. First of all, the word chasing. When you hear the word chasing, you're always running behind something, right? You're chasing something. So you're trying to catch up with price. So trading the right stocks and not the hyped ones. So try to go into a real deep analysis into your stocks. We're going to tackle today my scanning process a little bit, so that would help you get started on the right, creating the right hot list or creating a good list for you to look at. Mistake number 2 is over trading and burning out. Now, a lot of traders may say that the more trades you make, the more money you can make. And the reality is that it's the absolute opposite. The more trades you take means that you're applying more risk. It doesn't necessarily guarantee you more profit. So learn to be patient and wait for only the stocks that are really lining up perfectly. And we're going to talk about what that perfect quote unquote is. Mistake number 3 is basically trading without a plan. Well, I have to say I have been guilty. 25 years ago, I started trading, and I started day trading actually, because I come from the investing background and from the swing trading background, and I'm like, yes, I could do this. I don't need a plan. I've been doing this for so many years. It's just like applying it on a smaller time frame, and it's not the case. You really need a trading plan, even when you're investing, even when you're swing trading, or more so even if you are day trading. Create a trading plan, because random trades will deliver random results, and you really need a proven strategy, a management system that will get you to where you want to be. Mistake number 4 is letting your emotions run out of control. So fear and greed destroy accounts, and not proper position sizing for your trades. Basing your decisions on emotions is not the way to do it. And here's how to stay disciplined. Have a solid money management plan, and it's not very hard. And I'm not talking about a trading plan or a management plan that has to be literally volumes and pages and pages. No, you can fit everything into a little post-it. And mistake number 5, not investing or trading in the right, not investing in the right education. Most traders fail because they go in blind. So don't be one of them. So invest in your trading education, and literally in this date and time, you have a lot of free information that is right there at your fingertips. All you have to do is put things together. So every year, and this is where we dive in, every year stocks will move about 20 to 30%. Is that true? Yes, it is. So they move around 20 to 30%, maybe more each and every single year. But wait, there's more. What if I told you that this happens at least a couple of times a year? That's right. Let me share some charts. This is a 2024 chart of the Qs, and take a look at this from the swing low to the swing high, from the swing low here, which is somewhere in mid-March, all the way to the top here in July, and from the bottom here, which is August, all the way to the highs that we had end of December. If we take these swings and we add them up, 26% here, over 20% here, over 25% here, we are actually looking at a 70% move in 2024. So how do we capture such trends? How do we capture these types of moves? The answer is in the pullback. The market was generous enough and was into a total state of confusion right now because of the tariffs, and the market pulled back. Now, the reality behind this is that we were getting very extended, and we were trading into an ultimate core projection area. So these highs right here are into an ultimate core projection area, and this was the area of the taking out some profits, because nobody wanted to buy Nvidia when it was trading at all-time highs. Nobody wanted to buy Apple when it was trading at all-time highs. Nobody wanted to buy Broadcom when it was trading at all-time highs. Nobody wanted to buy anything that was into all-time highs. They were very extended. We had stocks last year that were up 100%, that were up 70%, that were up 89%. So we had a massive run last year. So what the market needed was a release from the tension, a pullback. And often hedge funds and institutional traders do this. Why? To buy cheaper. So what they do is they layer out, they scale out their positions into some technical levels, and when the time is right, the rotation is happening, and we're going to talk about that rotation. If you look at this chart in the Qs, this is the weekly chart of the Qs, and you can see that the trend is still in place. So we had a higher high, higher high, higher high, higher high, and then we continue with the low, and we have the higher low, higher low, higher low, and another higher low right here, but remains to be determined. So again, we still have a couple of days in the trading week. Today is almost gone. So we have Thursday and Friday, and that's pretty much it. And look at this candle right here. If we manage to close into the green, I'm pretty much sure that we can expect a continuation as we're going into next week, because let's face it, a massive green candle that closes into the very, very high means that it's likely to get bought 85% of the time as a continuational pattern. So if, let's say we close, let's say today's Friday and we close like this, right? The next momentum is going to be back up. So we could expect a move back to the upside. So far, do we have a downtrend on through the weekly? No, we don't. So what do we what do we have? We have a pullback. Yes, it was with increased volatility. This is what the trade wars are doing. If you remember back in 2016 and in 2017, when we had the trade wars as well, we had volatile pullbacks that were bought, and we closed into the very highs. And take a look at where we are trading right now into the Qs, right? So they're trading right now at 475. Look through the charts and see where we were in 2017. So it really didn't alter the direction of the market. That's my point. Now, the reason why I like swing trading is because swing trading offers us the possibility of massive profits if we find the right setup. And the right setups are coming under certain conditions that I will share with you today and that I respect to the T. Because if I do not have all the conditions met into the trade, I do not take the trade. And the reason why I'm sharing with you guys this chart, and by the way, all these charts took the snapshot before I came into this presentation. So they're not from last week or 3 months ago. They're very fresh charts. This is a stock. It's called FNMA. This is the Federal National Mortgage Association. And there was some chatter. We're not going to go deep into what the chatter was, but there was some chatter end of December. And I saw a great buying opportunity. We hosted a free event of market forecast for 2025, in which we talked the direction, we talked targets, we talked setups, we talked some of my favorite stocks, and you guys can also find that on YouTube. So we saw a massive opportunity here for a breakout. We took this opportunity right here. So the stock was just a little bit above $3. And in just a couple of weeks, we were up almost 120% on this stock alone. And we added along the way. So we added over $4. And guess what? I have added last week into it. Okay, so I added last week into it. So as of this point, so again, this could be your retirement account, and you're going to be up right now in this position alone 120%. You can see it right here. So from this low to this high, and the stock is also presenting a massive range. These are two of my favorite setups, breakouts, and I'm going to share with you the buy pockets as well. So we have a beautiful level of support determined by the double bottom formation, and we have these beautiful triple top formations. We break over the highs, up we go. So this is another trade that is setting up again as the breakout. And like I said, I have added, because this is into my long-term account, not into my swing account. But even if you have it in a swing account, look at this beautiful move that we have called in a free presentation. All right, it was pretty awesome. Now, you have to remember that, there's a lot of panic in the market, and, and this is also, created by the pullback, and also created by, the hype, the social media hype, the media in general hype, markets in turmoil and what have you. But the reality is that, if you look hard enough, and if you like to look again under, and if you, kind of like put your radar on there, you could find stocks that are flying under the radar. Take a look at Kroger right here. So Kroger totally ignores what the market is doing right now, could care less about the market pullback, and it is moving higher. And you can see here what beautiful, beautiful move is doing. And today it almost tackled, this is today's chart, and it almost tackled the prior high right here. So it took out the prior high. So it's ready to move higher. So like I said, there's always a bullish market and a bullish stock. You just have to look for it. Here's another one, Costco. Isn't Costco beautiful? Costco is a stock that I love to invest in. And not only that, but I absolutely love to swing trade. This is a beautiful pullback that happened into the 50 simple moving average. The rotation happened above this prior high. And actually, this is the point where I got in. And look at it go right now. And we have targets all the way to the prior highs, and we have extensions even higher than that. So Costco is one of those stocks that always needs to be on your watch list, because it could potentially deliver really big results. And these are good, solid stocks. We're going to talk more about the selection criteria in a second. But I just wanted to share with you that swing trading is the most important and effortless style of trading. take it from me, guys. I am a very active day trader. I day trade the power hour in the futures market, and I swing trade. I love swing trading. And to be very honest, I don't really see myself day trading like 2 years from now, but I see myself swing trading because even with, swing trading, it doesn't require for me to sit in front of the computer long periods of time. So I have a system that I have developed, and I have scanners that I have customized to find the trades for me. And then I filter them and see if they fit my personal trading criteria. And if they do, I take the trades. So basically this work process and basically all this work that, I'm doing is basically less than 10 minutes in a day, whether I need to trail push my stop a little bit higher, trail out of a trade, or set an alert. This is literally done in less than 10 minutes a day. So this is why I love swing trading so much, because you're getting unchained from the computer. But again, you need to know and you need to respect the rules of the game. And you need to be very patient with the setups, and especially in this kind of market environment that could be pretty tricky and pretty risky. So it's all about risk and it's all about management. When you think about the process, right? Think about the fact that in each and every single trade, you're going to be risking 1 R. 1 R is 1 risk unit, based on which, and the risk unit is based on your account size, whether it's 1% or 2% or 3%, or whatever percent you decide to allocate for that specific trade based on your risk tolerance. And all you need to do is position size. So you're never going to risk more than your allocated positions. For example, if I decide to risk only $1,000 on a trade, I set my parameters and I also position size for that trade. See how many shares I can fit. Maybe I can fit 100 shares, maybe I can fit 20 shares, or maybe I could fit 5,000 shares, depending on the price of the stock, and depending also on the entry and the stop area that the chart dictates. So who is swing trading for? Definitely busy individuals, or individuals that do not want to put like really hard work and be in front of the market all day. Part-time traders like me that don't want to sit in front of the computer all day. Retirees that want to supplement their income. Individuals of all ages that want literally a better tomorrow. Investors looking for faster returns, because let's face it, I'm an investor. I love investing. I love the idea of literally, living off dividends, living off the profits that I'm making from the market, and having that, building that nest egg. So when the time comes, right, I can retire comfortably. So swing trading allows you to generate that kind of income to pay for your bills. It basically generates cash flow. You pay your bills, your credit cards, what have you, and then you have some more money to put into your investing account. Always compound. And of course, this is for entrepreneurs and very busy business owners. So let's get nitty-gritty about swing trading. So this is swing trading 101. So swing trading is basically the sweet spot between day trading and investing. Because if you think about day trading, this is very rapid price action. And you're basically dealing with a lot of algorithms, and you have to be really good at day trading in order to make a living. And investing is that really far away time horizon. So you're looking at 5 years, 10 years, 20 years from now. You're looking to cash out, later in life. But there's a middle way. So swing trading is something not as fast as day trading and not as long-term as investing. And it generates high probability trades, and it offers the best chances of success and best return on your investment. So swing trading positions will be held in general from 2 days to a couple of weeks. But again, it depends on the market environment, because if you're trading into a, let's say, ranging market, you're going to be in trades for a longer period of time. And you're going to continue the trades. For example, if you're on the long positions, if the market is going to decide to break out higher, and if the market decides to break out lower, then you're going to stop out. So swing trading positions in general are 2 days to a couple of weeks, but of course, depending on market environment, you could be more or less in these trades. It focuses on higher time frames. My preferred 2 time frames to initiate trades on are the daily charts and the weekly charts. And because day trades are originated, for example, and because day trades are originated more on daily charts and weekly charts, the duration of the trade could be, like I said, 2 to 3 day follow through, right? So you're looking for a breakout point that will deliver at least momentum for 2 to 3 days and could potentially last, like I said, for a few weeks. Swing trading and investing captures a portion of the swing from the swing low to the swing high, but it's all based on technical analysis. Now, you're going to ask, are you paying attention to fundamentals? Yes and no, and I will explain that in a second. So swing trading basically is not about capturing the entire trend. So when we talk about swing trading, I'm not going to say, oh, you know what, I nailed the bottom and I really nailed the top. Sometimes it's really impossible to do that. But it's about finding the best possible entry opportunity and profiting from the stock's momentum to the upside or to the downside by not living through reversals. Sometimes when the market is in power trend mode, yes, you can live through reversals and you can actually trail through other methods. So, excuse me. Okay, so swing trading is literally a simple strategy when you enter trades based on the fact, you enter the trades when the price breaks above the pullback reversal pattern or breaks above the range, like a buy setup or a rotation. I call it a rotation. My mentor used to call it a rotation. So this is what we're looking for. And I'm going to show you exactly what the rotation is. And it doesn't have to be like extremely orthodox. So sometimes in this market, in these kind of market conditions, you could actually find these types of setups that are, for example, in counter trends or they're very messy environments, but you're still going to find these rotations that work. And of course, you have to limit your time. So for example, in a swing trade, that if you're looking for a 2-day swing or a 3-day swing or a 5-day swing, you could potentially be a little bit more attentive and say, hey, you know what, I'm going to start trailing it a little bit tighter, let's say on a 4-hour, because the conditions in which the market is at. So the key is to know how to enter the upswings or the downswings by identifying the sweet spot. And again, it is quite impossible to nail the tops and to nail the bottoms, even though you're looking for those specific rotations, and they are a little bit more riskier. So I think that one of the most important aspects of the trade is not only the entry, the stop, the targets, and of course the position sizing for the trade, but the location at which the trade is at, because the trend has a very high impact as to how the price action is going to react based on the momentum, based on the volume, etc. So here's trade that we called in our service. This is Williams Company, and we have stocked this base, if you will, for a really long time. And we literally have been looking at this trend. We've noticed that the volume was, pretty constant until, this base in here. So you can see that it was actually in between earnings season. These vertical lines represent the earnings dates. And this base was actually in between these earnings periods. And it was a little bit odd because typically, stocks tend to create bases like this as we're going into earnings. And because this one was a little bit longer term trade that we had in our portfolio, we decided to hold it through the earnings. And I'm going to show you exactly my process of how I hold into earnings and what I look for the company for the fundamental side. So this is a breakout. Like any other breakout that you have learned how to trade, you basically take it above the base, you put your stop below the base, and you let it run. Of course, you determine targets. If you don't have any targets to the left-hand side of the chart, and if you have clear void above, obviously it's not going to go to the moon, but I use Fibonacci extensions to determine projected targets. And one of the projected targets in this stock was around $57. So I was very observant around the $57 area, because as it was reaching this area, I wanted to look for a modality, a way in which I could trail and still kind of like capture the swing. But in this case, this is the out bar that took me out of the trade right here. So this is a pretty good risk on reward trade. So how do I select my winning trades? Well, it takes a proven strategy to select these high odds trades. So and it also depends on the market environment, because in a choppier market environment, obviously not all setups are going to work, but the trade needs to be fundamentally sound, because I come from the investing side of things, and not necessarily, from from the day trading technical aspect, right? So the stock needs to be literally fundamentally sound for me, at least medium and long term. So fundamentals in line with technicals. This is very important. So this is something that I pay attention to, and we're going to revisit this topic in a second. And I like to buy stocks that are on sale, stocks or ETFs that are on sale. And when to buy? When certain events happen in the market, and those events create the pullbacks. The pullback makes the share prices pull back into levels that become appealing to the buyers. So what are events? What are these kinds of events? Well, it was the 2000 dot-com bubble. It was the 2008 financial crisis, was the 2016 election. And by the way, how many of you guys in here remember the tariff wars that kept on going on between 2016 and 2020, right? So what does the market do? It didn't die. It didn't die, right? So the market continued higher. So yes, I told you, like, the market is pulling back right now because it was in an extension. It was in a core extension area, and it was from the bottom of 2022. But now it's just pulling back, right? So I think that now is the perfect opportunity to look at the market. I like to focus on companies that have thrived and survived over the years. I always diversify my portfolio, stay diversified. I just don't play the max 7, and then we're going to show you my portfolio in a second. And stay away from high-risk industries like airlines, hotels, biotech. This is what I do. So this is another stock, another stock, WMB. You're going to see here consolidating into the highs, looking for a breakout. This is Goldman Sachs right now, actually. So it has extended higher. You can see that it's pulling back. This is the magnet line right here. So anything that is going to pull back into this 0.5% or 0.618% is going to be a great buying opportunity, and even sooner than that, we'll see. CVX, again, breakout, and these are trades from today. These are stocks from today. CVX literally lining up for a breakout. Now, I don't know if I have a lot of time left, but this is my trade out loud criteria. Take a snapshot of this, and because I'm running out of time here. Meta, another buying opportunity that could come very, very soon. And just want to invite you to the Stock Swing Trader if you guys want to dive more into what we do. You can visit us on our website. It is tradeallout.com/stock swing trader. We offer a lot of information into our service. So I think my time is up, right, Brett?
Yeah,
I don't have any sound for some reason.
You're fine, Anka.
Oh, I still have time?
Yeah, you got about 10 minutes, yeah.
Oh, okay. Oh, wow. Okay. I thought it was just 30 minutes. So I'm like, ooh. Okay, so let's go back. Let's go back. Sorry about that. Okay. So I'm going to go through this TOL trading strategy criteria. So first of all, I look for good history of earnings, 3 years minimum. So I look to the left-hand side of the chart, right? So I look at the 3 prior quarterly earnings to see if they beat expectations or what the price action and how the price action reacted into these specific earnings dates. And I enter the trade after they post the earnings result. If I'm in a trade long-term, I could care less what the earnings result is. I stay in the trade. But in swing trades, I really don't initiate a trade a few days before or even a week before. I wait until the earnings are done, and I buy companies that have really good earnings and really good sales. And I look for companies that make a splash. I like to look at companies that have new products, new services, that have new launches. And of course, I look for stocks for dividends, right? Because I could definitely add to my investment portfolio. I look at the technical chart. I always trade with a trend. I'm a trend follower, but I also trade counter trends if case is there, but I like to trade with the trend. It's so much easier not to find the trend. I look for volume increases, I look for spikes of volume, I look for ranges, I look for all-time highs, and I look at fib locations. These are some of the technical things that are very important to my analysis. And I also look for volatility contraction. I like to look for setups that are a little bit more tighter. I like to look for that volatility contraction as well, that is literally pinpointing to a better risk and obviously conducive towards a better reward. Positioning within sector and indices, I like to look at laggards. I like to look at leaders, just like I said at the beginning of the presentation, that I like to look at synchronicity and divergency. And based on that, I formulate my list based on the leaders and laggards for that specific week or for that specific month. If we're trading into the window dressing for that specific quarter, depending on the time of the year and the time of the period. And I pick strength for momentum that could potentially blast higher, or for weakness if the momentum should be lower. And of course, I look for institutional participation because this accounts almost 85% of the market volume. All right, so entering highest trade, and these are some of the things that are very important to my analysis. First of all, I assess the trend. I need to see higher highs, I need to see higher lows, so I need to see that really nice move towards the upside, and then I look for patterns. I look for pullbacks and see if the price action is pulling back to a desired area. And I showed you what kind of, I use many levels of support, like I use dynamic moving averages. I use prior highs that are, creating new pullback areas, new support areas. I look at fib locations. So I look at a lot of elements into my technical. So I look for support resistance, obviously, like everybody else, and I look for confirmation volume and candle behavior. This is very important. I look to see if there's a rise in volume. So within the last few days, if the volume has been increasing, that means that institutions may be stepping in and may be legging in, and especially at those specific price locations where we could potentially see a continuation in the pattern. Timing, entry with, and again, entry within the zone of strength. So we don't want to enter on red bars, even though I was taught like never to exit on red bars, but always give them a little bit of wiggle room until they prove, and especially in swing trading, and especially in these market conditions where we have, a lot of fluctuation in price. And determining the buy point, the trigger point, that is very important into the rotation process, or the, let's say, the breakout process, or what kind of strategy lines up at that point. And of course, setting stops and targets, and not, of course, let's not forget about the share sizing, the position sizing. Here is a stock that is actually an image of strength. This is Waste Management. And look at this beautiful breakout. So first time it created the high back in here in July of last year. And shortly after, it created, not only that it created, but it blasted over this high, creating a little new high, and then it came back up. So perfect base situation. I like the formation in here. This could long-term could potentially double in price. This is something that I have owned in my performance, in my portfolio for some years now, but this is a great adding opportunity. And I have not added yet. I have to say I have not added yet because it just flew under my radar. Totally, I don't know, got erased from my list, and I just remembered it, and I'm like, yeah, what happened to that? So I analyzed it. I really don't analyze my long-term portfolio that often. I analyze it once a quarter. All right, so let's make 2025 your most profitable year ever. If you want to join the stock swing trader with smart decisions, smart trades, and smarter profits, you can actually join now, and we deliver an email to you each Monday. This is a service that basically it's over the top. You're going to get comprehensive analysis, macro to micro. You're going to get the market focus and themes because there are rotations happening all the time. You're going to get sector performance analysis on the sector performance, analysis on the market performance. You're going to get a technical market overview and trades for the week video. You're going to get an earnings calendar. You're going to get the economic calendar, and we're also going to talk about the events that are likely to impact the sectors or the stocks for the week. You're also going to get access to a live performance portfolio that's going to have, again, real-time access. You're also going to get a pre-launch access to my investment picks. I've always been on the investing side for more than 30 years, and I get a lot of questions from my members because they hear me, talk about, the portfolio and long-term trading and etc. You get access to my Private X feed, real-time market commentary analysis with live trailing, so you're not going to be left in the dark. I'm not going to shoot you and say, hey, Apple is bullish over 250, and you're just going to wonder, I mean, like, how is she trailing it, or what's she doing with it, right? Where is she taking profits? And so we're not just spitting out levels. You're going to get platform layout. You're going to get student personal support. You're going to get a share size calculator. You're going to get money management cheat sheet, and so much more. So if you want to join, it's $299 a month. Just want to show you a quick glimpse of what you're going to be getting. This is the newsletter that you're going to be getting with a lot of information in here. You're also going to get access to the performance portfolio. You also have access to the performance portfolio on our website, and that dates from 10 years ago since we created the Stock Swing Trader. You're also getting the hot list here. You're going to get investing ideas. You're going to get position size calculator. You're going to get the indicators that we use, OPEX calendar. You're going to get the holidays, P&L explain guidelines, disclaimer, etc. So you're going to get a lot of things. You're also going to get access to our Private X feed, and you can see here that we have a lot of, for example, today, NVIDIA, double bottom, so you're going to get a lot of updates on the stocks. Tesla, second higher low created on the pattern. So this is a stock that we have bid in, and we are actually making money in it, and it's holding really well. VIX levels for today. You're also going to get, lots and tons and tons and tons of updates right here. If you're interested in signing up, this is our page. This is our website, tradeallow.com, and this is the service. I'm pretty sure it's going to get posted in here. So this is pretty much it, guys. Thank you so much for having me.